The stock market is currently closed. BigBear.ai Holdings, Inc., BBAI, last traded on the NYSE on Friday, October 10, 2025, closing at $7.22, reflecting a minus 3.60% decrease or a loss of 27 cents during that day's session. The after-hours price was marginally higher at $7.23, up 0.14%. You might look at that day's sharp pullback and assume the speculative AI trade is completely breaking down, but that tells only half the story. The hidden reality is that while retail traders were selling, institutional activity in the option markets spiked dramatically, with call option volume more than doubling its daily average, suggesting smart money is positioning for a sudden upside movement, potentially a short squeeze, while the stock cools off. This creates a fascinating tension. The chart signals fear, but the derivatives market shows aggressive bullish positioning. Many investors, especially those using platforms like Robinhood or performing self-investing through an individual brokerage, see BigBear.ai simply as an extremely volatile high-beta AI stock that moves in sympathy with NVIDIA stock or Palantir. The common expectation is that BBAI's dramatic year-to-date gain, which has been well over 80 percentage points, is fragile, built purely on hype and susceptible to the next big revenue miss, which is a fair critique, considering the Q2 2025 earnings disaster. The company missed its EPS forecast by a shocking margin, posting a loss of $0.71 against an expected loss of $0.06, and revenue also fell short, dropping 21% from consensus estimates. This miss directly led to management pulling its full-year adjusted EBITDA guidance, citing unpredictable delays in U.S. Army contracts, a clear example of operational reality falling short of market expectations. However, to stop the analysis there misses the deeper structural movement underway. The market's initial recoil to that Q2 earnings miss, a reaction that was historically likely given BBAI's pattern of post-earnings declines, has since been largely absorbed and countered by powerful yet harder-to-track developments. First, look at the short interest. It's incredibly high, sitting at nearly 28% of the public float. This massive short position is the dry powder that the recent spike in call option volume is likely targeting. A modest piece of positive contract news or an analyst upgrade could force a mass exit by short sellers, creating a rapid, explosive upward move, or a short squeeze. This technical setup is the engine for much of the volatility you see, far more than the daily news flow. Second, and more fundamentally, while the government contract revenue has been lumpy and difficult to predict, the primary source of the recent Q2 earnings miss, the overall backlog for the company has shown a substantial increase, surging to $385 million as of March 2025. This growing backlog provides a crucial measure of revenue visibility for the next few years, suggesting that the problem isn't a lack of business wins, but rather a persistent execution and timing issue in converting those contracts into recognized revenue. For long-term shareholders, or those using a more structured platform like Fidelity for their online investment, this backlog growth provides a solid, tangible counterpoint to the negative narrative of earnings misses. The challenge for BigBear.ai isn't finding customers, it's building the operational efficiency to deliver on time and translate the contracted value into predictable quarterly results, a hurdle facing many high-growth government tech contractors, including its peers. The recent operational wins provide critical evidence that the company is trying to diversify and stabilize its revenue streams. The new exclusive partnership with EasyLease PJSC and Vigilix Technology to bring its AI solutions to the United Arab Emirates is a key move into high-growth international commercial markets focusing on logistics and predictive fleet maintenance. Furthermore, the collaboration with Analogic to integrate its ProDetect Vision AI into airport CT scanners is expanding its presence in aviation security, an area with massive regulatory-driven growth potential. These are significant commercial footholds that shift the dependency away from the U.S. Army and intelligence agencies, reducing the lumpiness risk of its government-centric business model. When you look at where the smart investment is going, Vanguard Group and BlackRock Inc. are the two largest institutional holders, and both significantly increased their positions in the most recently reported quarter, Q2 2025, with Vanguard's increase being particularly substantial at over 229%. Other prominent institutional names like Citadel Advisors and JP Morgan Chase and Company also showed dramatic increases in their holdings, with the latter increasing its position by over 3,250%. These aren't retail traders gambling on a short-term pop through the Robinhood app. These are massive institutions committing significant capital, signaling a belief in the long-term value proposition and perhaps anticipating the resolution of those temporary government contract timing issues. This aggressive institutional accumulation directly contradicts the perception that the stock is dead following its steep price declines from the $10.36 52-week high, a clear expectation versus reality mismatch. So what exactly is BigBear.ai doing? The company specializes in AI-driven decision intelligence solutions primarily for national security and critical infrastructure. Their systems use data from countless sources, satellite feeds, sensors, logistics databases, to provide predictive analytics that help government and commercial clients make faster, better-informed decisions. For the defense and intelligence community, this translates into advanced forecasting for military logistics, supply chain management, and intelligence gathering. For the commercial sector, it means biometric identity systems like Veriscan, which is being deployed at airports like Nashville International, and AI for cargo security and supply chain optimization. The company's growth thesis is built on the global surge in demand for AI-powered defense and security technologies, which is why they are often compared to other defense-related tech names. However, unlike a more diversified tech giant, BigBear.ai's revenue is still relatively modest, reported at $32.5 million for Q2 2025, with persistent net losses, reinforcing the high valuation risk that analysts often cite. For those who invest online, perhaps through a platform like Interactive Brokers, which is known for its detailed analysis tools, the high price-to-sales ratio of around 17 remains a clear red flag, suggesting that a significant portion of the current valuation is based on future contract wins and expected performance improvements that haven't materialized yet. Looking forward, the near-term volatility will continue to be fueled by two main factors: the technical pressure from the high short interest and the fundamental need to demonstrate execution. The next major catalyst will be the Q3 earnings report, which is tentatively expected in early November. After the Q2 debacle, the market's expectation is low, so even a slight beat on revenue or a more confident tone from management regarding the government contract backlog could create a strong positive reaction. Crucially, investors will be listening for updates on the Veriscan deployment, as success in commercial aviation security provides a non-government proof case for their AI platform. The biggest opportunity for the company remains the defense AI wave. Global military spending is on an upward trajectory, and BigBear.ai is competitively positioned in niches like predictive maintenance and logistics for the U.S. Navy and Army. The long-term upside depends less on new contracts, they seem to be winning those, and more on their ability to staff up, integrate acquisitions like Pangiam effectively, and overcome the bureaucratic delays that have plagued their recent government business. The risks are substantial: continued revenue stagnation, more dilution if the company has to sell the previously registered 65 million new shares to fund operations, and the ongoing securities law investigation regarding the 2026 convertible notes, which raises legitimate governance concerns. For investors engaging in online investing, perhaps through a managed intelligent portfolio or a service like SoFi Invest, the extreme volatility, beta of 3.19, means this stock requires constant monitoring and is better suited for the high-risk portion of a portfolio. It's definitely not one for the slow, steady approach of a Schwab Intelligent Portfolios user. Comment below how many shares of BBAI you currently hold and what price you believe the stock will hit after the next earnings report. Ultimately, BigBear.ai is a case study in AI sector momentum versus operational reality. The expectation is a simple, high-flying AI contractor. The reality is a company with a burgeoning, valuable backlog, but whose share price movements are dictated by a technical short squeeze setup and massive institutional positioning, all while fighting persistent, embarrassing execution issues on the government side. The institutional buying suggests a strong belief that the operational issues are solvable, temporary setbacks on the road to capitalizing on their defense and security expertise. The high short interest suggests professional skepticism that the company can ever deliver stable, profitable revenue.
The future direction of the stock is less about the AI tech itself, which is clearly effective, evidenced by the wins, and everything to do with whether management can move beyond lumpy government contracts and demonstrate predictable commercial revenue growth. If they can execute on just a fraction of the backlog and commercial opportunities, the current stock price will look cheap. If the execution risks persist, this stock will remain a hyper-volatile trading vehicle prone to sharp swings that reward only the most disciplined short-term traders on platforms like Fidelity Trading Platform or those using sophisticated quantitative strategies on interactive brokers. This tension between unfulfilled potential and confirmed institutional confidence is what makes the stock so compelling and so dangerous.